John, welcome to Real Vision.
Hi, Ash. Thanks for having me today.
Well, it's a pleasure to have you here. We were talking yesterday. We did a little bit of a pre-call for this interview, and I think we wound up talking for about an hour and a half. The conversation just took on a life of its own. First, before we jump in and start talking about what you're currently doing, tell us a little bit about your take on what's happening in crypto markets right now.
Yeah, it's an interesting question to lead with. Thank you for that. As most people know, especially viewers of our channel here today, what we're seeing is kind of a sense of a rebirth of the euphoria and the overall sentiment in the market that we saw in 2017. And of course, what's been highlighted today is this idea of the institutions have arrived. That's what's all plastered all over the media and what has people's attention today. Personally, for me, when I look at that statement of, oh, the institutions have arrived, I start to think about, okay, which institutions have arrived? And what's been really interesting on my side has been the lines that are being drawn between these institutions, because as the advocates have come out and started allocating to assets like Bitcoin, predominantly Bitcoin, right? Because this is where their mandates have allowed them to invest, is that the other side of the fence, the two-sided market, right? These players that make the market are actually coming out and speaking against things like cryptocurrency and Bitcoin today. So the overall chorus and audience and dialogue is growing, which is, I think, a healthy thing for the most part here in the markets today. There's a whole bunch of other things that we can get into, but I wanted to highlight, the growing chorus of both sides of the fence on Bitcoin and cryptocurrencies in general today.
Well, I should probably jump in and just say we're recording here on Thursday, January 28th. Obviously, markets moving very quickly. One of the things that we talked about last night was this convergence of where crypto markets are and the context within the broader US and global capital markets. I know this is something that interests you, and perhaps you could weave in a little bit about your own background because it touches both worlds. You're sort of straddling those two different markets.
Sure, I'd love to. So I guess starting with my background, very early on in my career, I actually started off as a derivatives trader. So I've been in traditional capital markets for about 10 years now. And after the derivatives trading career, I moved into becoming a financial advisor. I was educating other advisors in the space on how to get things like Series 3 designations and to conduct diligence on CTAs, managed futures products, non-traded REITs, basically anything that falls into an alternative sleeve of a retail or institutional portfolio at the time, and certainly today. And then after that, I moved on to managing portfolios for an algorithmically traded ETF strategy out of Carlsbad, California. And then at our height, we were managing about $500 million across all of our funds and strategies. And so during that time, I got a really in-depth look at how people were constructing portfolios. And you start to get a little bit of sense of, groupthink as it relates to what is diversification. And we can get into this a little bit later today, and I'd like to come back to it as it relates to portfolio construction and some of the things that DealBox is doing. But
Right.
for the most part, a lot of Real Vision listeners today are aware of the issues that people highlight when they talk about their theses for cryptocurrency or other high yield investments, and it's monetary policy, right? Where nobody in the financial space or crypto space is a stranger to this idea. 20 years ago, they might have been, but today it seems commonplace, to hear over a beer at a bar or over a dinner conversation with your family.
Yeah.
So that low yield environment is really what's driving these conversations foundationally. But there's a whole lot of interesting minutia in there that, might contradict some of the theses that people have today. So I'd love to get into a little bit of that later on.
Yeah, tell us a little bit about that. You talk about obviously the ultra low interest rate environment that we've been in now for some time. You talk about the fear of potentially inflation that never seems to arrive, but yet there is this perception that amongst some groups of investors, at least, that when you look at the Fed expanding the balance sheet, just for context for people who are in the crypto space who don't follow the macro space as closely as you do, we started out prior to the global financial crisis with about $800 billion in federal in assets held on the Fed's balance sheet, and then we swung up dramatically to about $4 trillion. This was a huge debate at the time, and now here at the in January, coming into the whatever we are in now in the U.S., the ninth or so month of the COVID crisis. Fed balance sheet over $7 trillion.
Yeah, that's great, Ash. Thanks for contextualizing that for the listeners today. One of the most circulated charts we see as it relates to inflation is kind of the value of the dollar, a purchasing power of a dollar, say over the last 100 years or so. And we watch that curve go down somewhere. The charts vary between 96 and 99% of inflation during that time, meaning that a dollar buys that percentage less than it used to in that certain time frame. So that's, the foundation again for some of these theses of, we need to be long a non-fiat currency or a fixed supply currency like a Bitcoin or another corollary to that asset. Right. But what interests me is if that is indeed your argument and you think about who it is that you're actually betting against is one of the most important things when I always take a position in a market. And I say, who's on the other side of me? And in this instance, when you make claims that large, who's on the other side of you is the central banks and the governments of the world. Now, we all know that there are issues with those things, right? But they are decades, in some case, centuries long institutions that have been able to provide strategically and for the betterment of the world for the most part. And you can debate, philosophy on this all day long, but that's who's on the other side of the hyperinflation trade and the fiat currency versus non-fiat currency trade. And personally, for me, I defer back to, the age-old statement on Wall Street: don't fight the Fed.
Yeah. If you had to come up with a single one-sentence summary, that would probably be it when you think about investors and looking out and understanding the context of the market they're in. So tell us a little bit about your journey into the crypto space, into Bitcoin first, and then some of the other things that you became interested in. I mean, you were, as you said, a derivatives trader, a classical sort of capital markets finance guy. How did you get interested in this space? What was it that called to you?
Yeah, that's always a great kind of genesis question to hear from people in these markets today. It was spring of 2011, I want to say sometime around March or April, and a friend of mine who had picked up some Bitcoin really early on was sharing with a group of us that we should buy some. And, we had differing opinions and we were younger at the time, so we didn't really think much of it. We said, okay, that's cool, but, what does that really mean? So about 2 years later, it's around the summer of 2013. And this is kind of that big first move that got kind of like the first headline about Bitcoin in the markets. And of course, it still wasn't on channels like CNBC or things like that or Bloomberg, but it was out there. You could hear it, you could Google it, you could look for it, right? So at that point in time, I reached back out to my trading buddies and I said, hey, you guys, this is really interesting. The price of a Bitcoin just passed the price of an ounce of gold on the NYMEX. What's happening here? Right? So we took a step back and we said, okay, there are these other cryptocurrencies out there. And if Bitcoin can trade with this kind of volume at these kinds of prices and market caps, there is absolutely no way it can be the only asset in that asset class that will have that type of performance over the long term. So we really put our heads down and we had a couple conversations with some of our friends in the Valley and in Wall Street. And we came up with actually investing in XRP, Ripple's native cryptocurrency. And I know that we want to talk about some of the hot topics that are going on around that today, but that was around the summer to the fall of 2013 when we actually started investing in XRP. And since then, it's been a fascinating journey to watch. I mean, it was basically silent for next to 4 years, right? Until around the summer of 2017, when the market started awakening again. And come fourth quarter of 2017, this is when I really took a step back and sat back in my chair at the wealth management office at the time and said, this asset, which I allocated about 1% of my net worth to, my investable assets at the time, just became 80% of my net worth. What's happening here?
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.